Welcome back to the Fish and Coach Show. My name is Brandon Fisher. This is Coach Ratner. Coach, what's the worst way you could invest your money?
So the worst way that you can invest money, I believe, is if you invest in mutual funds. Do you know why?
No, I would have not thought that.
Because they have, besides the expense ratio of about 1 to 1.5% depending, compared to like an ETF or that's like a 0.25%. And by the way, when they charge these fees, it's charged every year. So if you have $100 and they charge 1.5% a year, that's $1.50 one year, $1.50 next year, $1.50 next year, every single year, and eats away your earnings. But that's not the main reason why you should invest in mutual funds. The main reason is because most of them have a rule where they have to have a diversified portfolio. So what happens, that people don't understand this, is that most people that make a lot of money in the stock market make them on a small amount of stocks. They have a number of stocks that run significantly, like they've gone up 10, 20, 30, 40, or even 100 or 200 times in value. And those are the ones they make a lot of their money on. Most of the ones they lose, most stocks actually lose money. But so what happens is at the end of the year, usually once a year, a mutual fund has to rebalance their fund so it's evenly diversified. So if a stock has done really well, do you know what they do? They have to sell it down.
Oh, really?
So what they're doing is they're selling their best stocks every single year.
Why is that? Because
they can't have, let's say, for example, you owned Trade Desk, from 5 years ago, and it's gone up, let's say, 20 times. Every year, if it's gone up too much, it becomes too much of a percentage of the portfolio of the mutual fund.
Wow.
So what happens if you have a mutual fund and 40% of it is in Trade Desk or Apple or something, and you have another 100 stocks that are all just like 0.5% to 1%, it's too much of the portfolio. So what they do, they sell it down.
Versus an ETF,
Or an ETF is just an equal basket of every stock in that basket, and they don't sell it down.
So based on market cap, Apple is a majority.
I was a big part of the Nasdaq. It's a
Right.
major part of the Nasdaq. But when you invest in a mutual fund, you're selling your winners and you're keeping your losers, and this is why, in my opinion, and also a lot of investing companies will say this also, like Motley Fool will say, don't invest in mutual funds for that main reason. Not just because the fees are higher, but that's the main reason.
Very good. Wow. There's a little tip. Stay away from mutual funds. Look towards ETFs instead.
Yeah.
And there you go. Thanks for watching the Fish and Coach Show.
See you next time.